Welcome to our Tariffs and Trade Special Analysis session with Wendy Cutler, who is Vice President of our Asia Society Policy Institute and also runs our Washington, D.C. office. We're thrilled to have her help navigate all the moving headlines in this space. Welcome to our board and advisory council members in Northern California and Seattle, and to our consulate friends and those representing Asian economies as well. We have representatives from Australia, China, Georgia, Indonesia, Japan, Korea, Norway, the Philippines, Singapore, Taiwan, and Vietnam. Thank you all for joining us. For our format, Wendy will give remarks, and then we're going to spend the majority of our time doing audience Q&A. We do want this to be as interactive as possible. We have a lot of expertise in the room here. If you have a question when the time comes, please raise your virtual hand with your camera turned on. If you're called on, we're going to ask you to ask your question live on camera. Priority is going to go to our members. You can still sign up to be a member right now if you would like. We'll get to as many of you as we can. This event is on the record. It's being recorded and will be posted on our website. We have an hour for this. We're going to end at 11 a.m. Pacific. That's 2 p.m. in Washington, D.C., where Wendy is based. And a few words about Wendy Cutler. She leads our Policy Institute, specializing in everything from trade to investment, innovation, and women's empowerment in Asia. She has 3 decades of experience as a diplomat and negotiator in the Office of the U.S. Trade Representative. She was also acting Deputy U.S. Trade Representative. She's negotiated several major defining initiatives, including the U.S.-Korea Free Trade Agreement, the Trans-Pacific Partnership, or TPP, U.S.-China negotiations, and the WTO financial services negotiations. She is our guiding light at the organization, a terrific colleague and a friend. Please welcome Wendy Cutler.
Well, thanks, Margaret, for that kind introduction. And it's really my pleasure to be here with this group, your morning, my afternoon. There's so much going on the tariff and trade front in Washington and all around the world. And I'll do my best to offer my perspectives, give you a sense of how I see things proceeding and what should we be watching in the days, weeks, and months ahead. First, just to put this all in perspective, I mean, the president was very clear on the campaign trail that he was going to use tariffs as a tool. And so when he talked about a 10% universal tariff on everyone and a 60% universal tariff on China, he was very clear that tariffs were going to be kind of the go-to tool. But I don't think anyone expected that he would move as quickly as he did early in the administration to apply tariffs not only to China, for example, where he spent a lot of his first term focused on, but out of the box, applied tariffs to Canada and Mexico, 2 close allies and neighbors. Also, he imposed tariffs not only for economic reasons or trade reasons, he also showed that when there are foreign policy problems or other issues with countries, that he was also going to rely on tariffs. And so the earliest tariff threats we saw were against Canada, Mexico, and China, but not for trade reasons, more to do with migration and drug interdiction. Finally, I think that there is a sense that in this administration, the team is much more united. And during the first Trump term, I think he was surprised when he won and hadn't assembled a team. Although this time around he did, they were given loyalty tests. And so everyone's kind of operating on the same page. We are seeing some nuanced differences of opinions, but everyone seems to come back to the same talking points. So where are we today in this tariff, what I'll call saga? And here I'd like to kind of group my comments first based on all countries except China, and then turn to China separately. So with respect to all countries besides China, the president announced reciprocal tariffs on so-called Liberation Day, April 2nd. And on that day, he he assigned different reciprocal tariff rates to different countries based on a formula which really focused on the size of the trade deficit and the amount of exports. And those tariffs were in place for like about 24 hours or so. And then he decided, you know what, I'm going to suspend these tariffs for 90 days. And during that period of time, I will negotiate with countries. And if we're successful, then these tariffs are at least up to 10%. Excuse me, those tariffs over 10% could go away. And that's the time frame we're in now. And so the Trump administration is busy negotiating with a whole range of countries. They're, for the most part, coming to Washington. Some of these meetings, I'm sure, are being done virtually. But the idea is that countries will come to the United States and kind of show the Trump administration what they're willing to do in various buckets, including getting rid of their own tariffs and non-tariff measures, but also taking steps to bolster economic security, as well as commercial announcements such as increased purchases or new foreign direct investment plans in the United States. Just some high-level observations about this 90-day process. It appears that these negotiations are one-sided. In other words, the United States, for the most part, does not plan to make concessions to other countries, with the exception of rolling back most of the reciprocal tariffs. And here I would note that there are a number of sectoral tariffs in place, including on auto parts, steel, and aluminum. And there are a number of investigations underway under our trade laws, which could lead to more sectoral tariffs. However, the sectoral tariffs are not on the negotiating table for this 90-day period negotiation. We've also seen that the administration keeps talking of, saying like we're so close on a number of these deals, and this week or last week a deal would be announced. But these negotiations are taking longer than expected. As a longtime trade negotiator, I'm not surprised, because these types of negotiations are very detailed. Even if you're not doing a 50-page text, just to get rid of a non-tariff measure often involves a lot of back and forth. And these countries have a lot to check out at home, and they need to build support at home, but have a better understanding of what legally they can do and how they can approach these measures. And so this is kind of the dynamic we're seeing now. My sense is progress is being made with a number of countries, but there are a number of challenging issues that are on the plate. And I think a lot of these negotiations will, at a minimum, need the 90-day period, although it is quite possible that we'll see certain agreements being announced, in the coming weeks. If I had to guess which countries are now close to the top of the queue, I would put, this is my personal view, the UK and India seem the closest, although I'm sure if I spoke to negotiators from those countries, they would share with me a lot of the challenges that they're facing. Now, with respect to China, the president started with 20% tariffs, which would be additive to the tariffs that were put in place not only during Trump 1.0, but also select tariffs that were imposed by the Biden administration, as well as the current MFN tariffs. So in terms of additive tariffs, the administration has added 145% tariff on all Chinese imports, with the exception of a number of products in the electronics category. And China has responded with tariffs up to 125%. And so that's where we are now. My sense is just overall, China was way more prepared for this, for the tariffs that hit them this time around versus Trump 1.0. And why do I say that? For a number of reasons. First of all, China has used that period to become more self-sufficient and less reliant on the US for imports. It has also diversified its imports. For example, it's importing more soybeans from Brazil now than it is from the United States. Third, it has a whole toolkit of measures it can take against the US or any other country beyond tariffs. So even though China announced tariffs against the United States, it also announced restrictions on specified critical minerals. It launched anti-monopoly investigations against US companies. It imposed export controls on US companies, and the list goes on and on. China appears to be in this for the long game. I think it has concluded that time is on its side, that time will work to its advantage as more and more pressure is put on the Trump administration to resolve these issues quickly. And just last night, we learned that there will be face-to-face engagement between senior Trump and Chinese officials. The Vice Premier He Lifeng will be meeting USTR Greer and Secretary Bessent this weekend in Geneva. We'll have to see what comes out of that meeting. Bessent has referred to the objective of de-escalating and admitting that de-escalation of tensions is important before we start talking about how we're going to chart a path forward, perhaps including negotiations. But even de-escalating is not going to be easy, in that both sides may request preconditions from the other side, and there's not a lot of trust in the relationship right now. But again, I think overall, very positive development that the two sides at least will start talking to each other. Now, let me just then briefly wrap up with what to watch going forward. Let me just put a few things on your, on the list. Number one, after this Geneva meeting, USTR Greer will be going to the APEC meetings in Korea and Jeju Island. And at that time, he will have the opportunity to meet with a lot of Asian trade ministerial counterparts. So I think he'll continue the negotiations there. The APEC leaders meeting this year is scheduled for the end of October also in Korea. And that may be the first face-to-face meeting between Presidents Xi and Trump. And so in planning any engagement or any progress, I think the two sides will be, at a minimum, looking at that date, if not a sooner date, for the two leaders to get together and then to tee up substance for that meeting. Second, we need to be very cognizant about a whole slew of sectoral tariffs that may be announced in the coming weeks or months. The administration has already, again, imposed 25% tariffs on autos, some auto parts, aluminum, and steel, but they're also investigating under Section 232 of our trade law 6 more sectors that could lead to tariffs. And these include copper, wood, semiconductors, pharmaceuticals, trucks, and critical minerals. And so a number of countries are asking for the administration, not only in these negotiations, to protect them or exclude or get rid of the reciprocal tariffs, but they also want to get rid of, if not all of the sectoral tariffs, at least some of them. And my understanding is they are being told no, that this negotiation that's going on now only has to do with the reciprocal tariffs. The second thing to watch is, will pressure continue to build on the administration to show that the policy is working by producing more deals. And what type of pressure could be put on the administration? Well, really, economic. Prices start going up at the supermarket, at the retail stores, shelves, become empty with some key shortages in key products. US economic growth goes down as US businesses are reluctant to invest in such an uncertain climate. And of course, the president loves to watch the stock market, and the Treasury Secretary is very focused on the bond market. So if all of these trends start going in the wrong and continue to go in the wrong direction, that could put even more pressure on the administration to either walk back more from this policy or to work with countries to conclude agreements so they could be announced sooner rather than later. I think it's also important to watch Congress. And here, to date, Congress has been pretty quiet with Republican majorities in both houses of our Congress. They have basically given the green light to the president to continue with this tariff policy. But you are beginning to see some concerns raised by certain senators in particular. And I sense that as there's more and more harm that constituents are facing, and as congressional members get closer to the midterm election, you may see Congress asserting its role in this area. And I just would remind you that under our Constitution, it's Congress, not the executive branch, that basically has the authority to conduct trade and tariff policy. And finally, I would just note that our agreement with Canada and Mexico, the USMCA, is up for formal review July 2026. But I believe these negotiations will start, de facto will start sooner than that. And just yesterday, Canada's new president, Carney, was in the White House to discuss a number of these issues. Both sides have called the meeting constructive, but there's still a lot of friction between the United States and Canada, as well as with Mexico. And then I would just note that the only country besides China that has actually retaliated with tariffs of their own against the United States is Canada. But the EU, which is not making a lot of progress in its talks with the United States, is now kind of dusting off and putting the final touches on a retaliation package. So not sure if they will actually use it. But one thing we have seen that is countries like China have imposed counter tariffs against the United States, that the president has not been shy in responding with even higher tariffs. So this is something else to watch. So Margaret, with that, why don't I turn it over to you?
Sure, and I have a few questions. If people in the audience want to start raising their virtual hands, we'll get to you all. Thank you very much for that, Wendy. Let's stay on US-China. Do you have any more insight into the personalities or what the outcomes might be with the Secretary Bessent and the Trade Rep Greer meeting with the Vice Premier? And do you think that the negotiation with China is actually possible?
Yeah, so, when I'm counseling people, I think we should all just be realistic, keep our expectations low for the first face-to-face meeting. Secretary Bessent has already talked about, again, the need to focus on de-escalation. So I suspect they will have some conversations on how that could happen. I mean, you could see a scenario, I don't think coming out of this meeting, because I think both would have to check with their leaders, but you could, optimistically, you could see an outcome where in the next few weeks, both sides agree to, let's just say, cut their new additive tariffs by 50%. That would still mean the tariffs would be extremely high, but at least they'd be going in a different direction, and that is down. I think ultimately we will get back to the negotiating table with China, but I need to be clear. I think any negotiations are going to be very difficult. Secretary Bessent has talked about trying to do some really big agreement with China where we try and rebalance the imbalances in our relationship. I'm very skeptical that like an approach, like a big bang approach, which would require China to undertake major changes and reforms to its economy, is a realistic path forward. In some ways, I'm of the view that maybe a smaller deal, taking incremental steps where both sides build trust is a good first step, and then you can build on that over the coming years. But again, little trust, a lot of tension, and a president who is, very willing to keep using this tariff tool.
And what do you think is going to happen after the 90-day period? And after this, I'll go to Mark Cohen and Victor Wong. James, if you would like to ask a question, I ask you to please turn your camera on. So after the 90 days, Wendy.
So, with respect to the 90 days, I think what happens after, particularly whether the tariffs are reimposed or that they continue to be suspended, will depend on the country in question, the tariff rate they've been given, whether they've concluded a deal or at least made significant progress and are negotiating in good faith, and whether they were only assigned a tariff of 10%. So I see a scenario where the suspension period could definitely be rolled over for many countries. Of course, the administration is not showing any leg or flexibility here. And frankly, as a negotiator, I wouldn't either, right? I would make it very clear that the 90 days is a hard deadline to kind of press our trading partners to take that deadline seriously and do what they need to do and not delay and kind of string things out. But if a country's negotiating in good faith and a lot of progress has been made, but they haven't been able to conclude the talks for one reason or another, I would think it would only be reasonable, to extend that deadline. And again, there's a lot of talk that maybe the administration is hell-bent on keeping the 10% reciprocal tariff. And so a lot of countries were assigned just 10%. And again, for them, if it remains at 10%, then there's nothing really for them to negotiate because that rate won't go down. But we'll have to see whether the administration in the coming weeks starts to show flexibility even in that area.
Thanks for that. Mark Cohen, who is our senior tech fellow.
Thank you, Wendy, for a great overview. I had two related questions. One is, how much do these reciprocal tariffs signal a change in the global trading community? Tariffs used to be based on most favored nation status. And now we're talking about reciprocal relationships based on trade, market access, unfair behavior, et cetera. And another one, which I've been hearing increasingly frequently, is a fear that if this is what the future of global trade, then we're going to see retaliation by countries in non-tariff areas, particularly intellectual property. We saw a little bit of this in China, where they said they're going to ban Hollywood movies, and they also instituted the antitrust investigation against Google. How much are you observing that, or how much do you think that that's likely?
Mm-hmm. Well, these are great questions, and I couldn't agree more, Mark, that, right, this is like a complete departure from the global, trade order that, at least, when I worked at USTR, was still intact. But let's just be honest. I think that, since China's WTO accession, it didn't turn out the way everyone thought it would, in that China didn't become more integrated. Well, it became more integrated on its own terms into the global trading system, but didn't really, the rules of the WTO really didn't address a lot of their, of their subsidies practices, state-owned enterprises, et cetera. And so this disillusionment with trade has been building up with time. And we have seen, continued efforts in the United States to, question our WTO obligations. and question whether in this world can we really follow them because they're outdated and they don't make sense and not everyone else lives up to them. The good news is the U.S. is not talking about exiting from the WTO. And I would note that even though USTR Greer will be with Besant meeting China in Geneva next week, he'll also be visiting his team in the WTO. And I think that is a positive sign. I'm not sure Lighthizer or Catherine Tai, visited Geneva very much. And, with respect to retaliation, yeah, I think if we're setting the tenor that retaliation is okay, then I think other countries will look at all tools that they have, and may continue to feel they may even not even impose non-tariff measures to retaliate against the U.S. or another country, but feel that now they can get away with this stuff because the WTO rules seem to be less and less important and relevant.
Thank you.
Victor Wong, our groundbreaker member. Then we'll go to James Chong and Scott Marcial.
Thank you, Wendy. I have a couple of questions. First question is, if you were sit down with the Chinese delegation to negotiate, from China's side, it's very clear they want to lower down the tariff, right? From U.S. side, what exactly they want from China and what they can achieve? That was my first question. The second question was, it seems that the last trade war in the Trump term one didn't really affect China's export. Actually, China's export increased because they were able to transfer from Vietnam, India, many other countries. So it seems that Trump administration wanted these countries to erect high barrier with China. Do you think these will be part of a U.S. requirement to those countries? And do you think they will accept those requirements? Thank you.
Great questions, Victor. In terms of your second question, you're absolutely right. And frankly, the negotiations with countries during this 90-day period do include a bucket of issues related to economic security and China. But my understanding that the word China is not mentioned in any of these texts. But there's a real concern in the U.S. that we put tariffs up against China, but then Chinese companies, in an effort to avoid the tariffs, invested in transshipped and are transshipping through third countries, sometimes not even adding any value to the product, just changing, made in China to made in Vietnam or whatever, and then shipping those goods to the U.S., escaping the Chinese tariffs. And so in our negotiations with other countries, my understanding is we will be asking them to do things like strengthen their transshipment enforcement mechanisms, strengthen their rules of origin, have a better hold on what the value added that's being provided by Chinese companies in these countries. This would be difficult enough for particularly the countries from Southeast Asia and other parts of Asia. But what's even making this even more difficult right now is that China last week said to these countries that we're going to be watching you. And if in these deals with the U.S., you do things against China's interest, we are going to take countermeasures against you. And so I think this is, probably raising the angst among a number of our negotiating partners. And we'll have to see, how that plays out over time. I think at a minimum, having provisions on transshipment and against circumvention of tariffs is going to be a very important part of these deals with the other countries. Now, what do we want from China? In some ways, I think we want China to get rid of its state-led economy and look more like us, right? And anyone who knows China knows that's not going to happen. And so it's somewhat unclear to me, again, what, what exactly could be on the table realistically for negotiation. But, my view is even if as I say, I advocate for a more incremental approach, I think any deal reached with China really needs to be credible here in the United States, because the first question is going to be, you risked, we had a trade war for this. Is this it, right? So I think there would be a lot of pressure on the administration to make sure the agreement's substantive. And for me, like one of the key areas, and something I've been watching on the trade front, China really needs to rein in its exports of excess capacity goods, and not just a U.S. problem. You're seeing Southeast Asian countries, European countries, Latin American countries take measures against Chinese imports, whether it be in textiles or shoes or steel or semiconductors or autos. They're all beginning, they've seen a surge in imports, and many of them are worried that as the U.S. tariff walls, basically keep out most Chinese products, that China will be diverting that excess capacity to other markets, even flooding them more. So this is something to watch and something of great concern. I mean, my personal view is that China, if it wanted to, it could turn off these exports, right? It could, in the trade world, we call them voluntary export restraints. In other words, they just, they just tell their companies, you can only export X amount. We're going to be monitoring this, and the rest would need to be consumed at home. So for me, I think for an agreement to be credible, it would need, at a minimum, to get its hand around this pressing issue.
Thank you.
James Strong, one of our members in Washington, D.C., joined our China conference out here.
I want to ask 2.5 questions. One is that in Trump 1.0, clearly the USTR, Bob Lighthizer was driving the negotiation, but in Trump 2.0, Secretary Bessent is a leading voice and take over USTR Greer. Do you agree that this is because Trump 1.0 operates really on a concentric circle, and Secretary Bessent is a better communicator with the president than USTR Greer? Second question is that yesterday released the Tyson Moody's manufacturing PMI says that China's manufacturing PMI clearly deteriorates. Do you think that puts pressure on China to further to give China the incentive to negotiate? And the half question is that do you think that the U.S. Congress will push the legislation to require the chip makers such as NVIDIA to put similar to the GPS to report the locations of chips in order to prevent the leakage of or circumventing the U.S. rule on chips?
Okay, let me try and respond to those. First, with respect to the negotiating team, I think we need to keep a few things in mind. So basically, you have Greer, Secretary of Commerce Lutnick, Secretary of Treasury Bessent. When the administration started, Trump said that Lutnick would be in charge of trade, and that, kind of suggested that maybe Greer would be reporting to him. Greer was Lighthizer's chief of staff. He's relatively young, and he's, my sense is he's not in that inner Mar-a-Lago circle, but extremely competent, extremely well respected, and someone like Lighthizer who can get stuff done. I'm not exactly sure what happened between Lutnick and Bessent, but I think your observation is correct in that Bessent seems to be more in the driver's seat than the other two right now. And he is leading. Obviously, Lutnick it wasn't announced that Lutnick's going to join Bessent and Greer in Geneva. They are splitting up some of these negotiations for sure, because there's so many. But clearly right now, it seems Bessent's star is rising. But my view is, watch Greer and his team very closely. because most of the actual negotiations will be led by USTR, meaning that USTR knows how to do these deals. They've been doing them for a long time, even though these deals this time around are going to be different. They know the legal constraints. They know how to get stuff done. They know the non-tariff measures. They know the WTO obligations, et cetera. So I think over time, USTR, Greer, his star is going to rise. And, you know, but, you know, again, he's not light, he's very junior to Lighthizer, and that's kind of what he's, you know, he'll need to prove his worth to the president, but I'm sure he's already doing that. Your second question was about, now I can't remember. Oh, yes. So look, there's definitely pressure on both sides, U.S. and China, to get back to the negotiating table. These tariffs are hurting both countries, no doubt about it. And you're right that the latest PMI numbers coming out of China just shows how vulnerable their economy is. And, you know, both sides, I think, are somewhat reluctant to look too interested in a deal or interested in engaging because they think that shows weakness. I think that the U.S. had counted on the Chinese economy being so weak that China would come running to the negotiating table. That did not happen. And so I think what you're seeing here is that, again, both sides, for their own reasons and their own domestic economic pressures, have reasons to come to the table. And that's why I think why the U.S. and China, announced their re-engagement. I was surprised, frankly. I had thought that after the 90 days, that's when we may have seen a meeting. But I welcome the meeting now. But again, this is just a first step in what I view as a longer process, because lack of trust, a lot of different substantive differing views on the core issues, and a lot of the easier issues were dealt with during the phase one trade agreement, meaning that a lot of the outstanding issues are the ones that are really hard to write rules around.
Okay, before I go to our Asia Society Northern California Advisory Council chair, we do have a number of consulate representatives on the line. So if you'd like to chime in and share updates from your end, it would be great to hear from you. And now to former ambassador to Myanmar and Indonesia, Scott Marcial.
Thanks, Margaret. Hi, Wendy. Thanks so much for the really good update. A question, you referred briefly to the possibility that even if there were trade deals done, that 10% tariff, sort of baseline tariff, if you will, could remain in effect, possibly. I saw the New York Times had a story about this, that will this be the new normal? And I'm wondering if that happens, if the 10% tariff remains, assuming that there are deals to lower the other tariffs. If you take that 10% plus the other areas, sectoral areas that are off the table, according to the US, how significant do you think that is, both in terms of short-term impact on trade, but also in terms of other countries possibly doing more to reorient trade away from the US?
It's a great question, Scott. And I think countries now are grappling with the fact, I think many of them thought when they first went to the negotiating table that these sectoral tariffs would be on the table and that they could get lower than 10%. And I think now the reality is setting in. And I think that is going to complicate negotiations, because let's be honest, like, all these countries have to go home with this agreement, right? And, gain support. And, if you have elections coming up, you don't want to bring back home a one-sided agreement. And then, you could see a scenario where 2 months later, even more tariffs are applied, against you. So I think it complicates things. That said, many countries enjoy access to our market and want to keep it. So I don't underestimate, what they may do, and even what lines of their own they may cross in order to do a deal with the United States. But I think this is these negotiations are going to get more difficult, particularly as we come up against the 90-day period. And then you're right. Like, what does the world look like? Let's just say we get to 10% with everyone. So the reciprocal tariffs, at least for the time being, are off the table. But then, we see tariffs on critical minerals and tariffs on pharmaceuticals and semiconductors. This is really kind of a new world. And the question is, will countries then, can they negotiate out of any of these tariffs? Or do they feel that they just should take them? Or do they respond with their own tariffs against the US? And at a minimum, and I believe that we've seen this happening already, does this accelerate their efforts to diversify and to deepen their integration with other countries, even including China?
Our chair, Gary Reichel.
Good afternoon, Wendy. Thank you very much for doing this. A couple questions. Why wasn't Lighthizer in the administration? I guess would be one quick one. And would you be more comfortable if you really felt he was pulling the strings from behind the curtain, just given his, let's say, slightly more professional way of looking at tariffs and looking at these issues? The second real quick one is this comes down, I would take this to coming down to Trump and Xi, and it really doesn't matter what anyone else thinks, says, or does at this point. And then does the soft power damage that's occurring with this, and you can no longer take for granted that any relationship you have with the US is sustainable based upon a political election or someone's change of mind. Is that something that is easily going to be corrected, or are we in now for a somewhat permanent, maybe slow, maybe fast decline in our own influence?
Well, great questions. I don't know why Lighthizer's not in the cabinet. I mean, there were rumors that he didn't want to come back and be USTR again. He wanted to be either Treasury Secretary or Commerce Secretary. And for whatever reason, Lutnick and Bessent beat him out. And then the rumor is he was offered USTR and he was not interested in going back to the appointment he had. And so, I don't know if any of that's true, but I share it. I will say, though, that Greer is a protege of Lighthizer, and I would not be surprised if they talk every day. And, that's why I think with time, Greer will show his worth and become more and more, he'll become part of that inner circle. That's my view. So, we can sit and talk about would we be in a different position if Lighthizer were there? If he were USTR, he would still have to deal with Bessent and Lutnick, but obviously he was already in the inner circle. I don't think it's out of the question. This is my personal view that he may come back. Should Bessent or Lutnick not last the 4 years? I think that's quite possible. But again, we'll have to see. You raise a great question on our soft power, Gary, because as I watch all this and someone who's been in Washington for many, many years, one thing I've learned, it's so easy to destroy things and to unwind things. It's a lot more difficult to rebuild them. And, Biden really tried to and I think did a good job rebuilding our alliances after Trump 1.0. But what I'm hearing more and more from colleagues overseas is that now that the United States has reelected Trump, that they don't, I think many viewed Trump 1.0 as an aberration, and the U.S. would, come back, the U.S. they knew would come back, and under the Biden administration, they were very, all into kind of rebuilding the alliances. But what I'm hearing this time around, that even, let's just say, in 3.5 years, another president is elected who's like a Biden and really values these alliances and partnerships and soft power. You can't just do that overnight, right? Like you've unwound AID, these employees are basically fired. It's not like they're all waiting, 3.5 years from now to be rehired. So I do worry about that. I think that, it's not just AID, it's a lot of other agencies that probably a lot of people never even have heard of. but they all contribute to our soft power abroad. And frankly, like a policy that's just based on sticks and tariffs and sanctions is not a way to kind of bring your friends on board and those on the fence closer to you. In my view, we need carrots, and we had some carrots. We never had enough anyway. And now, we're basically either not using them or, or getting rid of them. They're no longer in our toolbox, which I think is quite unfortunate. And, as we all know, China, in the meantime, Chinese officials, including Xi Jinping, are meeting with their counterparts in third countries, in Beijing, and offering a lot to these countries in terms of more BRI projects, railroads, bridges, etc. Also trying to portray itself now as the guardian and the promoter of the rules-based international order and the global trading system. And so I think China is viewing this vacuum as a real opportunity for it to try and bring some of our partners and allies over to its side.
Last call for questions. We'll go to Sam Lee, who is a new corporate member specializing in IP, and then Victor Wong.
Thank you, Margaret. Thank you, Wendy, for your remarks. And I'm working for a law firm based in Beijing, Wanhuida. My question is how this trade conflict not only will affect goods in trade, but also trade in services. What's the end game looks like, let's say in a year? Will this change the world trade regime? Will this contribute to the reduction of U.S. trade deficit and U.S. debt?
Mm-hmm. So look, our president is very focused on goods and manufactured goods and, bringing these manufacturing jobs back to the United States. He doesn't seem to be particularly interested in our services exports and, and just earlier this week, I can't even remember, I think it was earlier this week, he announced he wanted to put tariffs on movies. Like, that makes no sense, right? Movies are not a good, they're a service. And so, what's the value of a movie? It's not like a good you just use, you can easily tarify. So that said, I think in any negotiations with China, if they go beyond just very limited scope, undoubtedly they're going to need to get into the services area, including from the US side, trying to achieve more market access to China's important services markets.
Victor Wong.
Thank you, Margaret. It gave me another chance to ask questions. My question is related to what Gary has said. Basically, if you look at this year, gold appreciated 30% in last month, 10%. Taiwan dollar appreciated 10% over last few days, and the US dollar and bond market has major issues. Do you think this sort of a deglobalization will affect PAC's dollar status, that people are starting talking about Brentwood 3, that the world trading currency, reserve currency will move away from dollar to a more commodity based? What's your view about this? Thank you.
So look, I'm not an expert here, but having been in a number of panels and conferences and the people I respect in this area and listen to, I think their view is that you may see some transactions now getting, conducted not with dollars, but the notion that there's another currency that's going to take over the predominance of the dollar, that's not going to happen anytime soon. So I just, share those comments with you, but again, not mine, based on what I'm hearing from others.
Thank you.
Nor in Seattle, this will be our last question.
Okay, Wendy, a fairly simple question. When I used to interact with your group, you were always working flat out. How in the world is USTR or the rest of the team in Washington going to negotiate in 90 days trade negotiations with all these different countries? It seems incredible to me that they even believe that they could do this. Is there, how is this going to happen?
It's a great question, and that was my initial question on all of this. Now, a couple of things I would share is that they're not negotiating with all 90 countries. The president keeps saying, like, 100 countries are here negotiating. The administration has clearly prioritized countries, and that's exactly what they should have done. And I think Besson keeps talking about a list of 16 or 17. I don't know which countries he has in mind, but I assume for the most part, they're our largest trading partners. Second, they're from what I understand, they're not, what comes out of this 90-day process is not going to look like a free trade agreement, right? Like a 500 pages of legal text. These agreements are called kind of framework agreements. And so I think there will be like commonalities, like, the same language in a lot of different areas that countries will be asked to sign on to. And then that will be augmented with like country-specific commitments. So in other words, in a framework agreement, you might say, like, both sides agree that we need to get rid of non-tariff measures, and with respect to country X has agreed to eliminate the following measures, see Annex 3. And so, there'd be stuff, the chapeau part of the language would apply to everyone, but then there'd be country-specific commitments. So that makes it a little easier to negotiate. But let's be honest, every country is unique. Every country is going to bringing different things to the table. And so the negotiators are going to need to be flexible. Also, what's different from this negotiation versus others, from what I understand, is the U.S. is not making any commitments. The only thing we're willing to do is kind of unwind the reciprocal tariffs. And so a lot of what took a lot of time in U.S. negotiations was all the domestic work we needed to do in order to either open our market further or change regulations, et cetera. So that's, at least in our view, is not on the table. I'm sure that's not being welcomed in other countries because they would want to, for them, they want to see the U.S. undertake obligations as well. I've spoken to a number of our negotiators. Yes, they feel very stretched, but I think they're also very, professional. And particularly my colleagues at USTR, they know how to work 24 hours a day. They can't do it for a year straight, but for 90 days, they could probably get by with, 4 hours of sleep a night.
I was wondering, Wendy, also what it would be like if you were negotiating all of this. Thank you so much for taking time out to speak with our two centers here. We know that you are high in demand, and we appreciate you giving us guidance on what to watch this weekend ahead and then the months ahead too. So come back and join us soon. Thank you to our team, Christy, Amanda, Paul, Jason, Evan, and our interns, Syra and Shane. 2 upcoming programs to share: our speaker series at SAM in Seattle. That's next week on Thursday, May 15th, with artists Jen Chongbin and Daniel Pak. They'll perform and present, and that's going to be moderated by Advisory Council member Tryla Bumstead. And we're hosting a big India conference here in San Francisco on June 10th. So do get your tickets now. If you'd like to donate and support our work, please do so through our website. We're going to throw up a QR code here shortly. You can do it there. Our fiscal close is June 30th. And we appreciate any and all support from you. Thank you again for joining us. Thank you again to Wendy on behalf of Asian Society Northern California and Seattle. We appreciate you joining us.